case with how questions, right? You throw how questions out there and you think you're being very, very clear, but it's often very tough, as you know, as an owner, to communicate. Hey, I told them, I said the same thing 16 different times and they still aren't getting it. Okay, well, we're saying the same thing. The language you hear or what's taken in is very different, or the frame of reference is very different. So your point about profits versus money versus cash versus Bitcoin versus PayPal versus, you name it, right? Versus an ETF versus, okay, there's lots of ways that those things kind of start to happen.
We all kind of know what money is, but really we don't. I mean, for planning purposes, we start with the idea of profits. If your small business is making profits, good things should be happening. There's no reason that they aren't. Regardless of where you are in the cycle, whether you've been making a lot of money or making a lot of profits before, or you've been losing a lot of profits. If your company's making profits, chances are there's sunny days ahead here, and that's where you want to be.
Right.
And we'll call that more money. People get that confused, but profits are not money, but hey, wait a minute, yes they are, or no they aren't. How do I answer that one, Adam?
Yeah, so they are tied together. And we alluded before, we're often, there'll be meetings with CPAs that we hear a lot about in terms of there's a lot of profit, and therefore there's going to be a tax bill. But there's not much, or certainly not as much cash in the bank or available as it shows that's either in profit or even what's owed to pay Uncle Sam. And so those profits can be hidden in a lot of places when it comes to the cash flow of the business, right, in terms of making money. Which is kind of a separate topic, Jack. We can address it, I guess, here for a couple minutes.
Gotcha. Okay.
So, cash may disappear in ways that don't show up on the P&L in terms of showing profits. One is in terms of how you're financed. If you have some debt, if you're paying off debt, you aren't going to see those debt payments reducing your profit. Okay, so
right. I can understand that.
And a lot of owners get PO'd about this when we talk about it. So wait a minute, I paid off $50,000 in debt this year, and you mean I don't get any credit from Uncle Sam for that? And you say, well, you get a little bit of credit. And so what do you mean? I said, well, the interest you paid on that, which is usually a very small fraction, especially in today's interest.
See,
world.
that's where people start to get confused.
Sure.
Yeah.
So it's real money. It's real money going out that you've now spent to kind of pay down debt.
I made these profits, but it's not going into my bank account because I paid off a bank loan or at least down on a bank loan that I took out a couple of years ago.
Right.
But wait a minute, that bank loan when I took it out gave me a lot more cash, didn't it?
It did, but you didn't pay any money on that bank loan when you took the money out. Right? If you took a line of credit and borrowed money, you weren't paying taxes on that.
Okay, and I could see that on my balance sheet if I know what my balance sheet looks like.
Yeah.
How many small business owners do you think, Adam, percentage-wise, look at their financial statements? And in this
Regularly?
case, not the official definition of financial statements, but a balance sheet and profit and loss. What percentage do you think?
On a regular basis, I'll define regular. We like to make sure they're looking at it at least monthly. I'd say monthly, probably less than 10%, probably less than 5%.
Yeah, I'd share those.
I think a lot of folks probably look at quarterly, maybe. Yeah, that'd probably be a little higher percentage, maybe 25%, maybe a third.
And when they're looking at the balance sheet and profit and loss, they don't know what they're looking at.
Well, again,
how many times have we tested that?
Well, yeah, because they aren't usually looking at it in a vacuum, Jack, as we know. They're looking at it because they're sitting down with an advisor of some type and kind, typically a CPA, and typically it's the CPA presenting the numbers, not the owner.
So there's a lot of head nodding going on by the business owner as the advisor / CPA is explaining the profit and loss and balance sheet. And after about a half hour, if his eyes have not rolled totally to the other side, basically they get up dutifully and smile and grumble about the tax bill they have to pay and the fee to their accountant, and they move on. So that's not answering, though. How do we make more money? How do we do that?
No, but that's usually where it tends to come up. So how do I make more money to make sure I can cover much of the stuff? So debt repayments are one place where cash money tends to get sucked out of the business. That's one area. A couple other areas where it may show up, and again you'll see it on your balance sheet, is one is accounts receivable. So depending how you're filing your tax return, you may show revenue and profit of money you haven't collected yet. So you may have some receivables that are there. Again, you're paying taxes on that stuff even though you haven't collected it yet.
Revenue. What's the, let me, you know, we're going to confuse the people out there, the people being in our listening audience. That's okay.
Right.
Because what'll happen if we confuse them, they'll have some how questions. And they might even call up and say, hey, how do I understand what you just said about this stuff? But when you talk about revenue, what are you talking about? Well, you're going to say something like top line. Top
Sales.
line on what?
Sales.
Sales.
Sales,
Why'd
revenue.
you call it revenue then?
Well, it's the same thing. Same thing, different term.
Oh yeah. Well, if I run a QuickBooks report on my profit and loss, it's gonna say income.
I know it will.
So
That's
what
another
is
thing
that?
you'd say.
Why is that? Isn't that the same then as sales and revenue if it's on the top line?
It is. The top line of your P&L. That's the top line.
Okay.
So that's money coming in the door. How about that? Let's keep it simple. Money coming in the door. Or it's supposed to be coming in the door. Stuff I've sold.
Okay.
I've sold you something, Jack, and you agree to pay me for it. That's my sales.
This stuff isn't complicated. Coming through the door, coming over the transom.
Yeah, that's right. Comes over the transom. It happens that way. That's what email does and the websites do, right? It's like the virtual version of the transom. Just kind of comes over.
No wonder nobody knows what the heck they're looking at. You know?
It's all right.
Boy, this sounds pretty confusing to me.
All right, so yeah.
I'm confused again. We're
I
going
know.
out of another segment. I'm going out confused again.
Well, so our sales come in, and we may not collect all those sales yet because we're going to have receivables. We're giving our clients some credit, right? So that money still isn't collected yet. But again, if you're done on what's known as an accrual basis versus a cash basis, depends how you pay taxes. So account receivables is another area where it might hide. So we talk about
Isn't
debt.
that a food?
Accrual food? I don't know. It might be.
No. Oh, okay.
I don't know. That's the way you account for your business. Accrual and cash.
Okay.
We're gonna be getting, instead of people calling here at 440-946-9468, they're gonna be calling their CPA.
They're gonna be calling the police.
We call their CPA and say, hey,
Who are
what's this
these
accrual
crazy
versus
people?
cash stuff, right? So a couple places that money can get sucked out of the company. One is we talk about is repaying debts. That's not gonna impact your profit. Okay, so you're still gonna have to pay taxes on this stuff. It's paying off debts. It could be on receivables, accounts receivable that you haven't collected yet. And the third big place is going to be inventory. You know, we had a lot of retailers over the years, and you know, when Jack and I walk into retail stores, and if you have an owner of a retail store kind of walk you through their store, they'll tell you all kinds of stories about all these things that are on the shelf, right? But Jack and I are very impartial, and we see dollar bills sitting on those shelves. It's money. It's money you've decided to invest in putting that what may be a dusty product sitting on that shelf.
As it moved and sold are synonymous.
Right.
For what we're talking about here.
So often that's where cash money gets caught up in terms of the business. And so if those things are flowing through well, and if you don't have debt, okay, so that's a good thing. And you know, there are some smaller companies that are debt free. So they aren't having cash sucked out by debt payments. But most have to deal with accounts receivable, and many have to deal with inventory. And so a lot of money tends to go into those areas. We have other areas too. We have a lot of clients that are very good with different ideas, and often they'll invest money in different ideas where you don't necessarily see that going either, right?
That's right.
So there's lots of places where the money can dissipate to. But I think to your point, Jack, is we're going with this is to understand what your numbers are telling you. That's
Very
where it starts.
important.
That's where it starts to.
How could you make intelligent decisions without doing that?
But most people give up. Your point. The eyes start to roll when the CPA is talking about it. They don't encourage them to wrestle through with this stuff or to struggle through and push through with it, and have them present their numbers until they start to kind of get it. So stick around. When we come back from our last break here, we'll keep on this discussion here in terms of how to make more money in your business. I'm Adam Sonnhalter.
And I'm Jack Mencini, and we'll focus now. We'll wrap it up over the next segment about how to make more money and get you out of all the weeds here that we've taken you. It's communicating business language and running it and executing it is very difficult. That's what we've been doing the last 3 segments. We'll talk about how to make more money when we come back.